Positive trade data from China wasn't enough to overcome market worries about tensions between Beijing and the US. Customs data on Monday showed Chinese export growth bounced back last month. Exports rose an annual 8.3% in September, well above analyst forecasts and marking the fastest growth since March. But renewed tensions have raised fears about jobs and further deflation in an economy reliant on selling manufactured goods overseas. China's efforts to diversify its economy to deal with US tariffs could take a hit should President Trump carry out his threat to reimpose triple-digit duties. It would be in retaliation for Beijing announcing sweeping rare earth export controls last week, which it said was a response to US aggression. China has a near-monopoly position on the minerals, giving it great leverage in the trade war. Any trade restrictions could hurt global supply chains in industries from autos to green energy and aircraft. The global risks have most analysts predicting that Beijing and Washington will work towards de-escalation in the coming weeks. Trump also posted over the weekend that everything would be fine and the US didn't want to hurt China. But the uncertainty showed up in Asian markets Monday. Shanghai stocks dropped as much as 2.5% in early trading before regaining most of those losses. Shares in South Korea also slid, while MSCI's broadest index of Asia-Pacific shares was down. The tensions also saw gold soar to a record high Monday. Safe haven demand was up on the US-China fallout and expectations of interest rate cuts from the US Federal Reserve. Spot gold reached a new high of just over $4,078, while silver also surged to an all-time peak.